In this video, I'm going to analyse Argo Blockchain stock by giving my views on the business and whether I would personally buy shares of ARB right now. And if you find the video useful, please drop me one of these to support the series and the channel. Argo Blockchain is a leading UK-based cryptocurrency miner, and together with their subsidiary of Argo Blockchain Canada Holdings, they engage in crypto asset mining services worldwide. They were formerly known as GoSun Blockchain Limited, although this was changed in 2017 at a similar time to when they were first founded. ARB has 3 main mining facilities, and I'm sorry, but I'm very likely to butcher the pronunciations of these 3 names. Firstly, we have Baye Comiu, Gatineau and Mirabel. Yeah, I know, not good. I could have probably used Google Translate or Googled where they were from, but I guess I was lazy in this regard. They are listed on the main market, have 7 employees and a market capitalization of £234 million, although this is probably going to be vastly different by the time this video is uploaded, even though it is literally the night before. Argo Blockchain is in an oligopoly, meaning that there's many competitors, although individually none of these firms have more marketing power or influence or mining power compared to the others. Furthermore, at the current stage, I believe this is an industry with limited barriers to entry. And this means so long as a business has capital available, then they would easily be able to jump in and create their own mining business. But then it does also require a higher level of knowledge to understand and comprehend this in order to effectively manage the business and successfully be able to outcompete or have competitive advantages on peers in the industry. Which in turn, Argo Blockchain does have some competitive advantages compared to that of other publicly listed companies in the industry. They have a considerably higher petahashes per megawatt, which is actually compared to Bitfarms or Hut 8. This means they are far more efficient or power efficient, meaning that the cost to run is therefore less, meaning that they can have higher overall margins on their mining. And this is also whilst remaining a smaller market cap company to both of these listed competitors. As of right now, they are the only cryptocurrency mining stock listed on the London Stock Exchange. If we use any software like Simply Wall Street or Yahoo Finance, then it's likely to be inaccurate. This stock is still in the early stages, and therefore 5-year data ranges just simply don't apply here. So today I'm not going to be looking at the fundamentals as they would usually be pronounced, but instead I'm going to be looking at the investor report and the interim results for the first half of 2020, ended in June. What we can see is that in the first half of the year, they've increased their revenue by 280%. Furthermore, we can see that they've mined 545% more Bitcoin. And I think this is really impressive considering the halving of Bitcoin had taken place during this year. More specifically, after a quick Google search, it was actually on May 11th, 2020. This basically means that it requires twice as much power to now mine that same amount of Bitcoin. So overall, it's now more difficult to mine Bitcoin going forward. And when it halves again, it will become even more difficult, for example. So when looking at their mining profit margins, which are 39%, and we compare it to what it was last year in the first half, which was 76%, you may be disappointed by this number. But the sheer fact that they have had their Bitcoins halved certainly means that this is a very resilient number to have. And this is to do with the business environment, and these difficulties are going to be across the board. And so if they're able to maintain these competitive advantages over those publicly listed competitors, then they will likely do well as a growth opportunity. I personally look for businesses that are profitable, and therefore, maybe foolishly in the last stock analysis episode again with Greatland Gold, I had dived too deep into the financials, even though they were an early stage exploration company for mining projects. So today, what I am pleased to see is that Argo Blockchain is actually profitable. Whereas a lot of these smaller cap companies, they are usually smaller cap because they're a little bit more speculative or very likely not making that profitability just yet, but it is priced in the future that they are likely to be profitable soon. When we look at these financials of Argo Blockchain, they are in fact profitable, and this is a great sign to see. Whilst it's certainly not the highest margin available, it is still quite impressive. And once more, whilst their earnings per share have decreased 0.32 pence to 0.18 pence from 2019 to 2020, and this could be an alarming sign, this is still part of the halvening process that took place in 2020. And especially because when this happened, they were at such a small size, I anticipate that when the next halving happens, which I believe I did one quick Google search and it said 2024, so this could be right or wrong, speculation that they should be better prepared and adapted to deal with it likely having a lot more machinery available. I'd like to see the quality of Argo Blockchain's balance sheet, because if they're over leveraged, meaning they have too much debt, this could be a cause for alarm and certainly destroy shareholder value. So you'd be pleased to know that when I looked at their balance sheet, their short-term assets outweigh their short-term liabilities and their long-term liabilities because they didn't have any long-term liabilities. Furthermore, when we look at their balance sheet, they have a very, very low debt-to-equity ratio of 1.4%. This gets more impressive. They've managed to generate a higher cash position. In December 2019, this was only £0.16 million. But now, by the end of June 2020, they have a cash position of £1.3 million, which is way more enough to cover that debt. Although this could have been done due to private funding, although I don't entirely know and I've not dived too deep into it. So this could mean that further private funding comes in as the stock is becoming very popular, or a share dilution could be on the way in the future should they go into unprofitability levels. And you can get a free share worth up to £100 if you sign up to Trading 212 and deposit £1 using my link in the description down below. A concern that investors may have is the depreciation of their mining assets. Computer hardware is typically one that depreciates at an alarmingly fast rate, and you can see that it has in fact accelerated. Since 2019 it was only around £646,000. It's now caused a depreciation of £2.9 million, which is certainly eating into their overall revenue of around £11 million. This will likely mean that they will have to continually invest spare capital into the repurchasing of newer block mining assets, meaning that over time this could be a very difficult thing to balance. For example, the large telecom dinosaur companies like BT or Vodafone, they are in a very tricky position because they have to maintain their infrastructure, but the cost of maintaining it means they can't upgrade further. But because Argo Blockchain is at a much smaller size and scale, they should be able to keep on top of this, assuming that they remain highly profitable with their margins and in future Bitcoin continues to rise. To clarify, I'm not against Bitcoin in any way, but I'm going to lay out a bit of a bear case for it so that we could have a more fair and non-biased opinion. Thus, a concern could be how the value of Argo Blockchain is tied to these cryptocurrencies and furthermore the likes of Bitcoin. And whilst at the moment, sure, it is nearing all-time highs and it looks very likely to continue increasing, this could be a negative should it suddenly decide to do a reverse U-turn and drop. And there's still quite an argument against it to how it can really last in the future as a store of value. How could it be expected to take market share away from gold if it's decided to be a store of value, yet has a volatility of over 10% per day? Furthermore, would governments really allow us to move on to a more Bitcoin standard in the future, or would we still remain using our current everyday currencies, which I believe are called fiat? And how would these factors impact a cryptocurrency miner like Argo Blockchain? Honestly, I'm well out of my depth to be able to give an answer for that question, but if you do have the answers for that, please leave some comments down below, as I'd love to learn more about cryptos and in particular this stock. However, an advantage for the future is that more barriers to entry in the industry could appear, meaning it's tougher for smaller companies to then enter and become a miner. This is because it's likely going to require more capital and more power as Bitcoin becomes harder to mine. This could mean that the bigger companies or the companies around now can grow up to a significant size, build a moat, and therefore the smaller companies are unlikely to take away market share. And this gives an opportunity for Argo Blockchain, as they are growing now, to build up a significant size before the next halvening. And the halving, sorry, I keep saying halvening, I don't think halvening is a word, but it's just a force of habit. And this could give them that chance to build up so that they are more prepared compared to the newer companies that try entering the industry. And they could also look towards acquiring smaller companies to therefore bolster their growth inorganically, but I will admit this is just speculation on my behalf. Furthermore, currently in my opinion, and likely very much speculating, I believe Bitcoin is rising to all-time highs due to the Federal Reserve. This is because they are pumping a lot of liquidity into the US markets and expanding upon their balance sheet, which in turn devalues the dollar, and so many people are looking for a place to put their money, especially when interest rates are at all-time lows. This could mean, sure, they can invest in the stock market, and that's why we've seen such incredible returns over the last year, especially in the US markets. but this could also be put into the likes of cryptocurrency assets like Bitcoin. I think this is actually more of a positive than a negative. This could be a hint that we're at the start of a bull market, and therefore it's very likely that they're going to continually keep expanding upon their balance sheet, as the economic devastation due to the pandemic could very much be an issue if they do not do so. Argo Blockchain also has a leasing agreement with Celsius Network, which is set to deliver 4,500 Antminer S19 and S19 Pro models. This remains on schedule and is expected to be fully operational by February 2021, or from the time of making this video, just 1 month away. This will add an additional 430 petahash to the company's available computing power, and this is a markup of 66.67%, and that's how much of an increase it has to their overall mining capacity and could be very huge for their revenue. Also, because it's a leasing agreement, this could mean they avoid a lot of the depreciation on the assets and could mean that they're able to reduce their margins ever so slightly, but also save more on that capital depreciation of the GPU mining assets. Once more, speculation on my behalf. In my opinion, I think this is a great speculative investment to add to your portfolio, although I'd be careful just to not build too big of a position towards it. Sure, over the next year it might have a fantastic run-up, but then it's very much reliant on how Bitcoin will do in the future, and that's something I'm not as bullish on. And this ultimately depends on your risk tolerance, as it's very heavily tied to that exposure of Bitcoin. But at the same time, if you think Bitcoin's going to continue rising, but you can't buy the currency itself, then this could be a great way to gain exposure into that market. They've demonstrated that they have competitive advantages, they're more power efficient than other publicly listed companies, and so I expect that this company will have higher growth potential than their peers in the industry. And for the first time since the creation of the stock analysis series, except for Boohoo, which I had already owned prior, I'm actually going to be buying this stock. However, there are a few catches towards this. Firstly, I'm not going to include it in my ISA, so this means it's not going to be part of the portfolio updates. I will include it to say I've bought it to be transparent, but this is going to be in a separate Trading 212 general investment account. This is because I'm using a different level of capital, and in fact this is money from free share referrals. I think I could a little bit bump up the returns I could get by investing in this stock and holding. Furthermore, this is only a short to medium term in my opinion, as at the moment I think they are fairly undervalued, and therefore I would like to gain that exposure, potentially make a trade, which could be a mistake, might not be, and try and make more money so that I could put that money into the ISA and therefore go for my long-term returners. The position size will be roughly £700 worth, which will be around 3.68% if we include my ISA's overall value. But as of this video, and this is Wednesday night, I have not bought any shares yet, and I believe I will be purchasing it on Thursday, but obviously shares could go up, I'm still likely going to buy. If you're interested in my Greatland Gold stock analysis, then click the card at the top right of the video. Thank you for watching, I'm Osborne Foreman, have a great weekend.